Well, tensions rise as the United Auto Workers prepare for walkout at select factories. UAW's president laying out the union's new stand-up strike plan to apply pressure on companies Stellantis, GM and Ford. But what will the auto strike mean for the economy? Here with the details is Yahoo Finance's Josh Schafer. Hey, Josh.
Hey, Rochelle. Yeah, so what this means for the economy, of course, is in some ways yet to be seen because the strike itself hasn't even started yet, right? But if we extrapolate this a little bit forward and we assume the UAW does indeed go on strike, and we also assume that basically all of the roughly 150,000 workers that are a part of the UAW were to eventually go on strike, that's where economists are getting a lot of the numbers that they use to see what the overall impact is. So first, you kind of need to consider how big this could be and how big the hit could be to auto production. Think about Ford, GM, Stellantis. That accounts for about half of the U.S. auto production we've seen so far this year, just under 50%. So when you remove that, you're removing about 30% of general production from the auto industry in America. Some economists have estimated that essentially these workers not working could be about 0.1% to GDP per week taken off. That was EY's Greg Dacko said that on our air earlier today. But zooming out as far as what the major implications could be, Rochelle, I think the most interesting thing I saw was from Oxford Economics saying that you're going to see this impact key indicators that the Fed watches. So when you think about a big group like this going on strike, we saw last month in that August jobs report that it came up that the Hollywood strikes were happening, and that took down part of the numbers, part of those non-farm payroll ads. We could see that maybe happen come October. We could also see an impact on inflation here. If car prices were to go up because you have demand or you have supply down, prices would likely go up, and the car prices you're seeing right now on your screen, used car prices have been falling. Used car prices could actually tick back up because of this and have an upside inflation risk if this strike were to continue for a continued period of time beyond, say, the 4 to 6 week period. If we went several months into this thing, it could actually impact inflation, which of course is something we talk about quite a lot on this program.
Indeed, it certainly doesn't help that car inventory is still not where it was even at pre-pandemic levels. So we're keeping an eye on those prices. Our very own Josh Schafer, thanks so much.